Okay, so we've done some field work. You can see that I'm back in the dashboard. And so the field work mostly is in this risk response area here of the dashboard. Assets, equity, liabilities, that's where all the links to the work programs can be found. And here at the bottom, these general audit procedures, just want to highlight that quickly. These are some quite relevant areas. We put them in a separate box because they're not really linked to financial statement areas or balance sheet income statement positions. Good. So we've done the field work. Now let's move on and have a look at the completion and reporting and see how we can now evaluate the whole result of the audit, do the review work, etc. First thing, let's start with the identified misstatements. Now there's two documents here. There's a checklist and the actual worksheet. I'm going to start with the worksheet. The checklist just gives you a bit of guidance how to deal with your misstatements. Okay, here at the top of the worksheet you can see the performance materiality. This amount flows into this worksheet from the materiality calculation that we did at the beginning when we just loaded the trial balance. It shows my trivial misstatement threshold, so anything under $10,000 we don't need to deal with right now, and it's configured to be rounded to ones. Now this little button is actually quite useful because this will now allow you to bring up the adjusting journal entry dialog directly from this document. So I think in an actual audit the team has been creating and posting adjustments while they were doing the work. I'm just going to use the dialog from here right now to show you the end result of that. So I have one example here. Just going to say new adjusting journal entry, and this is going to be a unrecorded projected adjustment. So let's say I've done some sampling, found some errors, and from that I've calculated this projected misstatement. So unrecorded, that means it will not be calculated in my reporting balances. So it will not show up in the automatic documents, it will not show up in the FSA, but I can keep track of it and I can generate a list of all my misstatements, and here in this document I can see the total impact of my unrecorded proposed adjusting journal entries. Okay, so the example that I had is account 700, trade receivables 50,000. Yeah, that's 1 0 too many. There we go. And I'm gonna credit that to my account 4,000, sales in store for also 50,000. When I now click OK or close, you will see that it calculates real time. It's changing on the fly. And this misstatement, this proposed adjusting journal entry is now showing up here in the assets. That's my receivables plus 50. In the P&L, it increases that as well by 50, and therefore the equities would also be increased. So per type of this table, this worksheet will sum up the misstatements per type: factual, projected, judgmental, and then sum it up in these lines, and it will do that real time as soon as you post the adjusting journal entry. Now I have another one that I wanted to show, and I'm going to make this unrecorded factual. That's account 605. No idea what that is. Oh, it's work in progress. And I'm going to credit 1210, which is my bank balance. Okay, close. And you can see it now populates this line here at the top. If I would like to see more detail, I can just click any of these hyperlinks here, and that will take me to an automatic document that actually shows the details of this adjusting journal entry. So there's multiple ways to do it. I can just click to the automatic document, or I can go back to this adjusting journal entry dialog if I wanted to. Now, the thing that I wanted to show you specifically is the impact on the FSA worksheet, because I think the FSA worksheet, although it's mostly driving the documents, therefore very critical during the planning, it can also be very important during the finalization. Sorry. So one thing that you can see here right away is that the unrecorded AGEs, the misstatements, will show up in this column. So instead of having the total that you have in the misstatements worksheet that we just saw, you now have it broken up by specific financial statement area. So I think towards the end of the audit, when you're reviewing all the results of the audit, this would be very useful to look at in the FSA worksheet. Now, one specific use case that we have identified is this. My other current liabilities, which in this case is the bank indebtedness, was not material, was smaller than my performance materiality. But now by this misstatement, it could actually go over that threshold and it might become material. So in order to warn you or to ask your attention for that, we show you this question mark red warning that will tell you that when you add up the misstatement with the original balance, this might now actually become material. Have you done enough work, or should you reconsider and do a bit more work? So that is one example here. If I now go back to my, let's see what's the quickest way to do that, to my misstatements worksheet here, go to my adjusting journal entries, and I change this one, the one that we looked at just now, my bank balance, from unrecorded factual into a normal adjustment, you will notice a couple of things. The misstatement type is still set to factual, and when I click OK, that means it now moves it over to this line. It now becomes an actual adjustment, and we now see this as an adjustment that has been corrected by management. So the workflow is that you first create a unrecorded and then have the misstatement type. When you then switch that from a unrecorded factual to a normal, you will see that the misstatement type will stay and will also be here. Now you have of course you have the other misstatement options. When you use the NA, that's, well, it's a bit hidden, but this would be saying that there is no misstatement type. We would consider this to be an adjustment that you have to make because your client also made an adjustment. So I think there's two types of adjustments. The first one is something that was found during the audit, and then the client accepted it, agreed to also make that adjustment in his books. That would be when you would want to keep the actual misstatement type, the original type. If the client came to you and said, okay, we had to make two or three more adjustments, can you also make these in caseware to make sure that your trial balance is consistent, then you would make those with the misstatement type NA. And any adjustments with the misstatement type NA will not show up in this misstatements worksheet, so they will not go to this first line here. It's only when you have a misstatement type that we consider that something that was something that came out of the audit was discussed with the client, and then the client decided to correct that in his books. So only then it flows to this first line. Okay, so now let's go back to the Fsa worksheet again. Let me see if I can just minimize it. No, it's probably there. And I've changed my misstatement from a proposed unrecorded misstatement to a final normal misstatement, and now you can see that the final balance has changed. Something that I mentioned earlier in the videos is that my planning balance still will not change, because based on that planning balance, I think 2 days ago now, we made our materiality decisions in the planning stage. But now the final balance has changed, and that has caused this FSA to become material. So it's no longer a question mark, because that's what we show with the misstatement, but it's now a warning triangle saying, okay, there's a risk of insufficient audit work. Please go and review the work that you've done. If you are if you would want to get rid of this question mark, what we actually the way we've designed this is that you can go into this column here. Let me just widen that column a little bit. It's called the Audit Response Finalization. And you could now go in and say, okay, we have done additional work, or you can put in your comments why the change from not material to material was already dealt with in work that you've done in additional procedures, or you have brought back the work program and did some more work, etc. And as you can see here, just by commenting here, the exclamation, the warning will disappear. So again, for reviewers, this would be a very important column to always look at and to make sure that actually enough work has been done. You could also have the opposite situation. Let's say a financial statement area based on the planning balance, it was material, but then because of changes that the client made, etc., things became not material. In that example, we will show an exclamation triangle as well, but it will be yellow, and it will say there is a risk that you might be doing too much work. So we also try to help you with your efficiency. If something is not material and it used to be, or it was material during the planning, you might have already tailored the work program to do quite a lot of work, but then not all of that might be needed anymore. Okay, so that's the first thing here in the completion. That's the misstatements and how those flow and how the FSA and the misstatement worksheet are connected. The other thing that I think is very relevant here in the completion is the evaluation of the audit evidence, or I think you can also call that review. So one document that we've designed is what we call the partner manager summary. And I've come to realize that this is different from one country to the other, or maybe from one firm to the other. So there are some firms that have partners that are very close to the actual work, and you have firms that have in which you have partners that only review 1 or 2, maybe 5 key documents and kind of rely on their supervisors, managers, and then sign off on the audit. I think this document is more suited for that second group of firms where the partner doesn't go through all the work papers in detail, but does a high-level review. And so in this document, you might have noticed that while I was talking, when you click generate, it goes through your FSA. It picks up all the material financial statement areas. From there, it goes to your actual work program, and it then summarizes all the risks linked to that work program, all the issues created, and the conclusion. So you might remember this from the earlier video where we created an issue directly from the work program. That's actually this issue. And the conclusion, I made some changes to that. I've added some text to this, so that's in as well. The goal is to have all the key issues per area, per material area, so you can really do a top-down review. You can start with the key issues, and from here you have all these hyperlinks, and you can drill down into the details. Now, another thing that we found is that issues sometimes tend to become quite operational. So even though it's a review note or something that has been documented, an exception that had been found, the wording might not be the kind of wording that you want in a memo like this. So we give you the option here to go in and to, let's say, use cleaned up wording. And the nice thing about this is that I'm actually only changing the memo. I'm not touching the source issue, but now the memo probably is a whole lot better readable. If I wanted to go back to the original issue wording, I can say restore to original. And when I have to regenerate the partner manager summary because something has changed, I can actually choose to clear modified issues on generate or not, or just generate. So you have to find your own way. I would probably just stick with the cleaned up wording. And then as a supervisor, as a manager, maybe as a senior, you can really write a nice memo explaining all the high level topics, making sure your partner can do a very efficient review. A little side note there as well. This is always a little bit hard to explain, but the partner manager summary will first go to the work program. then we'll summarize the things that we just looked at from the work program. But if there is an issue linked to a document that is within the same folder, it will also add that to the summary. So this is the issue that I created manually on the lead sheet. The lead sheet is in the same folder, in the same area as the work program. So that's why that is also summarized here. If that is something that you don't want to show, you can just click this collapse box. It will just collapse, and then when you print this to PDF or when you read it on screen, you can just go and you don't have all these details. Sometimes a document like this, you don't want all those details, so that's why I put in these collapses. Okay, so I think that's those are two very important things in how to how to do the completion part of your audit. Next thing up in line is the reporting. So let's have a look at management letter points and how to work with those in audit.